The market down just 0.2%, so really not much to look in terms of actual trends where trade might likely go for the rest of the week. What's your sense of where the market might likely end the week?
Oh, it was quite an interesting day today, like you mentioned earlier. A 0.2% drop in the market with no clear sectoral advantages. You know, we're experiencing a lot of headwinds in the markets at the moment. You know, a lot of positives, a lot of negatives in terms of fiscal measures that are trying to push the market. We're seeing certain signs that have the add-on effect of sort of a quantitative easing on the one side, which is very positive for the market. But, you know, we also have on the negative side where we have a lot of uncertainties about the other reform projects or policies going on around the CBN, the AMCON, and certain other issues around the stock exchange too. You know, creating a lot of uncertainty in the market, and so we're seeing that consistent sideways movements of the market.
Yeah, I'm reading here that the market doesn't certainly believe that things are going to get better, and yet you have got so much in terms of positive news. I mean, with that power plan that was presented last week, then we also had, of course, the efforts that are being made around AMCON. And in addition to that, we do know that investors are looking at Nigerian banks with potential for M&A activity. And today we had the CEO of Standard Bank saying that the longer you leave the acquisition opportunities of the Nigerian banks that were rescued by the central bank for longer, the less the chance that you'll be able to actually bring in foreign investors. Why are not banks up on that news?
Well, you saw a bit of that too, but another policy issue that is sort of affecting the market slightly lately is the deadline for the divestment out of the concentration in risky assets, especially in the stock market area. And so a lot of the banks are selling down somewhat, but a lot of negotiations are going on behind the scenes. A lot of work is being done, a lot of interest has been shown for major opportunities. I think it's going to be incredible. A lot of opportunities are going to emerge, and we're going to see a stronger banking sector down the road. The timing also is an issue. You know, we had some positive news today about the CBN and the president going to sort of agree on some of the board members of the AMCON. So all those effects are going to sort of push the market in the right direction. But consolidation, that's for sure, is going to happen. It's a timing issue.
Are we seeing any of those banks reflecting some kind of premium of the expected consolidation that you've been talking about?
Yes, there are going to be premiums as well as discounts, but it will also depend on the value proposition that's going to be presented to both prospective and current investors and the existing shareholders. So it's going to play out either way. I mean, it's difficult to say on the one hand for a particular institution that you're going to see a premium or some kind of discount.
Tamunoye, have you seen any kind of improvement in terms of investment sentiment given the actions that have been taken around the Nigerian Stock Exchange by the Securities Commission?
Yes, sentiment has been improving, but I think maybe a little more work can be done to sort of sustain that kind of confidence. The trade groups are, you know, not sitting down. They're working actively to improve confidence. But if some kind of timeline were to be released as to the implementation of some of the reforms around all the initiatives that we see, we're going to see at least some clarity as to where the market is going, and that for sure is going to boost investor confidence.
And if you were to put any money into the Nigerian market now, where would you direct it? As an outsider looking in on Nigeria, I would imagine power would be top of your list as well as banks.
Yes, the banking sector, but both of those are sort of long-term plays. It just depends on your investment horizon, I would say. The power sector, yes, is going to take a bit of time before all these policies come through and be implemented, before all the funding that will be made available sort of, you know, follow through to the end investor. It's going to take a bit of time. So if you're a longer-term investor, yes, you're going to reap a lot of rewards in the power sector, in the banking, because assets are really cheap right now, I must say. But there are also other, you know, sectors like consumer staples, the conglomerates, you know, fast-moving consumer goods. Those are good areas that are stable, that are sort of present a lot of value that, you know, if you want to just stay afloat and wait until you see a clear direction before you make some more major plays.